And well, welcome to our conference. As you've heard from David, we've been working on the top 500 bank brands with brand finance going back to 2006. And I'm not going to talk about the results particularly because you've already had the headline results from David, or I'm not going to talk about them in any great depth. And in the magazine, you'll have the full 500 and lots of other tables showing you how the whole thing works out. What David said to me, he said, Brian, can you try and provoke some discussion? So that's what I'm going to try and do. And I'm going to do that. I'm going to try and make the case for the importance of branding in building an identity for banks and increasing market share. But I'm going to slightly attack the theme of the conference, which is competition now working in the banking sector? My argument actually is that the UK banking sector doesn't really lack competition, and it's never really lacked competition, and it certainly doesn't lack competition in terms of price. I think you could actually argue that the reverse is the case. We have an awful lot of banks chasing the same customers with the same products, and they're hardly making sufficient returns. So my argument would be that rather than breaking banks up, we need to find ways of making the market more attractive to them. I mean, if we want them to lend to SMEs, maybe we need to look at the actual structure of the economy as much as we need to look at the banking sector. So let me try and bring sort of branding and competition together a little bit. And clearly when we set off in 2006 with our brands ranking, we didn't really know what was ahead of us. We didn't have any idea. We're just about to go through one of the most traumatic periods in banking history. And the Banker magazine goes back to 1926. So we do have issues of the magazine reporting on the 1930s crisis and the Second World War and so forth. But certainly the last 4 or 5 years have been pretty exciting in banking terms. And we didn't realize then that banks were going to trash their reputations, or at least some of them did. Because even throughout the worst years of the crisis, we saw big increases in brand values for some banks, and particularly, obviously, the emerging market leaders, so the Chinese banks, the Russians, the Brazilians. I mean, they all increased their brand value. And as David alluded to there, what we've seen over the last few years is actually banks from the developed world, from the US and Europe, actually recovering their brand values. So one of the tables we have in the latest ranking is actually a top 10 of the largest increases in brand value by bank. As I said to you, it is in the magazine for you to take a look at. And if you look at that table, actually 4 of the banks in the top 10 are American and 2 are European. The European ones are HSBC and UBS. So both those banks have recorded big increases in brand value. And there's another interesting table in the magazine which is showing brand value by country. So basically, if you add up all the banks in a country, sum up the brand values, which country has the largest bank brand value. And that's interesting. Throughout the crisis, even when we had the worst impact on the US banks, America has always been top of that ranking. And the UK still remains today in 3rd place. So it's a banking sector that's punching way above its weight in terms of GDP. And of course, you can argue about whether that's a good or bad thing. Depends on what you think of the UK having a financial industry as its key leading industry. But the reason I emphasize this point is because in the current anti-bank environment, there's sort of developed a view that some of the banks have destroyed their brand value completely. And this was brought home to me. Actually, last year, I attended a little sort of seminar, roundtable discussion on the brand's ranking. And there was one member of the audience who was a certain John Redwood MP, who's actually a former investment banker who used to work for Rothschilds. So I think he probably thought he was in the House and I was the minister. It was sort of question time or something. So he asked me, well, how can Royal Bank of Scotland, which has been nationalised and still losing money, have any brand value left at all? So the point about it is that, in fact, when you think about it, I mean, brands survive even bankruptcies. So even though a company goes through a bad time, it can even go bust. But actually one of the jobs of the bankruptcy court in those circumstances would be to assess the value of the brand and what you're going to get for it in terms of repaying your creditors. And in a way, that's why we've become so interested in brand value, because we thought that the banks didn't really value their brands properly, and this was a way of pointing out that they had some hidden value that they should be developing. And clearly in the crisis, we've seen banks, Citibank, Royal Bank of Scotland and Lloyds that have sullied their brands somewhat, took quite big knocks during the crisis, but they still retain their brand strength. And I'm sure that when Antonio Horta-Osorio talks to you later, he's going to tell you that Lloyds doesn't only just have one strong brand, it actually has three. So the crisis didn't destroy brand value, but obviously what it did do was press the case for overhauling brands and strengthening them. And clearly what's happened is that the various scandals we've had, as a result of that, people have lost confidence in banks and they've become skeptical about the banks and the people who run them. So I think there's clearly a task to be done in terms of reconnecting with that customer base. And that's why at the Banker we've been keen to lead the debate on banking. And as David says, we've been running this as our cover story now for several years. It's one of the most eagerly looked forward issues of the year. But looking forward, what I'd like to see is the major banks distinguishing themselves more in terms of the products and service they provide, rather than just trying to compete on price. So I think what we need are banks and banking products that target themselves at all the different sectors in society. So we want banks that are looking, some that are looking after mature audiences, some that are looking for the millennials, the iPad generation. We want people that are we want banks that are kind of got a service tailored to big companies, some that are small companies, startup companies, banks that are lending for infrastructure purposes, for Islamic finance, and so on and so on. I think that's what we haven't got in the banking sector at the moment. And that would have the impact of creating real competition based on product and service differentiation. At the moment, we've just got competition on price. And a lot of discussion has been around the sort of startup banks, the Metro banks, the Aldermores, the Islamic banks of Britain. Can they shake up the banking sector? I think they're helpful, but I think their role is going to be limited in what it achieves. I think it has to come from the major players. But as I've argued, I don't think there's a lack of competition in the sense that you're seeing banks earning supernormal profits by acting in concert or having some kind of oligopoly. I just don't think that's the case. I think the opposite's the case. I think if you talk to a bank CEO these days, they're telling you how much they're struggling to cover the cost of capital and make just an average return. And what's happened in the few years since the crisis is you've had this huge burden of regulation. The banks are asked to hold much greater levels of capital. They've got to be very liquid. All this kind of stuff makes banking really unattractive in terms of a way of earning a return on capital. And we're given no clearer example of this than when Lloyds and Royal Bank of Scotland tried to sell off their branches at the behest of the European Union, and there weren't really any takers. And someone's going to have to explain to me one day why, if you're a bank and you get into trouble, the European Union thinks it's an appropriate punishment to make you sell off your branches. I've never really quite understood the logic, but anyway. But, that's why I think, because banking is not so attractive as an investment sector these days, that the idea of breaking the banks up and trying to create a more competitive environment with smaller banks, I think we may just end, I think it's not going to produce those results. We may just end up with less banks and less competition. In fact, my argument is that even before the crisis, there wasn't a lack of competition in UK banking. I think there was actually too much competition on pricing. And one of the reasons that banks got themselves into trouble in the crisis was because they were so busy trying to sustain profits. So what they were doing was, in the domestic market, they were slashing the margins on mortgages and personal loans to such an extent that they weren't really earning a proper return on it. And then what they were doing is they were trying to compensate for that lack of return by going out and getting themselves into riskier areas like high yield, with the results that we now all know about. So I think competition, it's a bit like motherhood and apple pie, isn't it? I mean, it's sort of, it must be good. It sounds as if it must be good. It must be the cure for everything that's wrong with the market. So politicians have seized upon it. Even bodies like the Independent Commission on Banking have come up with, if only we could get more competition in the market, everything would be fixed. In fact, I would argue that in some ways a country gets the banks it deserves. So I'm going to go on now and make some comparisons with our system with the German system. The reason I'm doing that is because you often get an argument from politicians, especially left of centre politicians, oh, it works so much better in Germany, doesn't it? The banks there are much more long-term and they work in partnership with business and industry much better than the UK banks. Well, I think it's true up to a point. I think there is more of a partnership arrangement between banks and companies, and I think sometimes that's helpful. A company gets into difficulty and the bank stands behind it during those difficulties, but sometimes it leads to companies that should have been shut down actually not being shut down. And don't forget also that the German banks are mostly public sector banks, so the sort of Sparkassen and so forth don't actually have to report to shareholders in the same way that UK banks do. But I think if you wanted to create a German industrial model, you'd have to have an awful lot more things in it than the UK model, which the UK model doesn't have at the moment. So you'd also have to have, the partnership arrangement between unions and management that we don't have in the UK, and which Bob Crow's busy proving to us later on today. You'd also have to have, the Germans have a very good apprenticeship system that doesn't exist in the UK. And they have a political system that's inclined to address problems before they reach them. So they have this wonderful set of reforms which Gerhard Schröder put together called the Agenda 2010 reforms, which reformed welfare and pensions and made Germany more competitive even before it got into a crisis, even before we got into the financial crisis. And they have the government-owned development bank KfW as a way of supplying capital to some of the areas of business that they want to particularly promote. So we've got Vince Cable talking later on. I hope he's going to talk about his business bank. I think that's a very good idea. And you could have made the argument actually that, having taken one or two banks into national ownership, if you were really serious about, financing for industry in a way you wanted to do it, maybe there should have been a debate about, do we actually keep them in national ownership? Okay, nobody actually had that debate. But we do have a business bank. I think that's, a step in the right direction. So just to finish off on a few more words about branding, because whatever the political outcome, whether Ed Miliband gets elected and the banks get broken up or whatever happens, banks are going to have to find ways of addressing their profits problem, which is they're not making enough money on the capital they're investing. And they're going to have to get themselves back to some proper financial health. And I think branding can play a role in this, but it has to be approached in the right way. And we've been holding this conference, as David said, for a number of years now. And at some point, someone always gets up and says, well, the problem with banks is they're not enough like Apple or Google or one of these kind of high-tech firms. And I've never been quite so sure about the comparison. Actually, we had a dinner last night, some of you were at, and you'll have heard this debate again last night. I'm not sure that anyone's ever going to wake up in the morning and feel as excited about getting out a mortgage or a new savings product as they are about buying a new iPad. I just don't think banking's got that appeal. So I think if we are talking about more branding in banks, you have to kind of think about, what is unique about the banks and how do we target specific parts of the market that the bank has to service and appeal to them. And I think one example in advertising terms of someone getting it right is the HSBC advert. So I don't know if you've seen the HSBC advert where you have this little girl who starts the lemonade business, and then suddenly it starts growing like Topsy, and she's dealing with these suppliers all over the world and so forth. But I think that's a rather effective way of saying that you're interested in serving entrepreneurs. So I think about branding for banks, it's got to address things that we want from banks, which is reliability, security, and effective complaint and resolution service when something goes wrong. Different priorities from the iPad customer. So finally, I mean, as old as banks in the UK are, and they have a wonderful heritage, I think this work on this type of branding is really only in its infancy, and it's going to become increasingly important in a post-crisis market where just competing on price is increasingly taking the whole industry on a complete road to nowhere. So I hope I've done what I was asked to do, which is stimulate the audience for a discussion, and we can debate the German versus the UK political system later on. And we do have a German manager from Barclays, or we did have last night. If he's, yep, there he is. Great, okay. You're going to lead the case for the defence. Okay, thanks very much.